In this unit, we'll be discussing how to develop a savings and spending plan. Cash flow refers to money coming into and leaving your possession. Budgeting is one of the most important tools that you can use to successfully manage your money. We often use the terms cash flow plan and budget interchangeably. Either way, it's a tool to help you handle your wealth. Using a budget will either enable you to manage your money, or you'll find that your money is managing you. A simple way to think about a budget is that it tells your money where to go instead of wondering where it went. Creating a budget can often be intimidating at first, but not nearly as intimidating as the repercussions that may come by not using a budget. One reason people may not use budgets is because they believe it will be like a straitjacket. They think that it will restrict them from doing what they want to do. The truth is, money managed correctly gives you more freedom. Some people in the past have been told, no, you can't spend your money on that, or it's not in the budget. The truth is, the purpose of a budget is to avoid spending more than you make, not taking the fun out of life. Many people don't use budgets because they've never had one that actually worked for them. You're going to make mistakes, so don't expect to be perfect on your first budget. The truth is, with practice and with diligence, it gets easier. For some people, when viewing a budget, they freeze or become paralyzed based on the fear of what they think they're going to discover. The truth is, it's better to face bills and debt now and be proactive and fix the situation than to let it linger. The simplest budget for many people to create is called a zero-based budget. It gives every dollar a name on paper and a purpose before the month even begins. The theory behind a zero-based budget is money that is not directed towards a goal would otherwise more likely be wasted. This simple equation shows you how to calculate a zero-based budget. Start with your income, subtract your expenses, and at the end of the month, you should have $0 unaccounted for. Please note, a zero-based budget does not mean that your bank account is zero at the end of the month. Remember, it simply means that all new money is accounted for in one way or another. Start your budget planning with your 4 walls. You should always prioritize paying for food, shelter, clothing, and transportation before anything else. The envelope system is a budgeting tool that enables you to pay for your basic necessities and then put remaining cash into labeled envelopes for specific areas of spending. When you empty the envelope, you simply stop spending on that aspect of your life. As we prepare to create a budget, please note there are 4 types of expenses that are often found on an individual's cash flow plan. Fixed expenses are costs that remain the same from one month to the next. Examples include mortgage or rent, car payments, and insurance premiums. Variable expenses are costs that do change from one month to the next. Examples include gas, groceries, clothing, and electricity. Periodic or intermittent expenses are costs that occur at various times throughout the year. Examples include car repairs or oil changes, car registrations, and doctor's appointments. Discretionary expenses are considered non-essential costs. They include things that we don't need or could live without. Examples might be dining out, subscriptions, gifts, and entertainment. Budgets don't work when you leave things off of them. Anything that requires money should be included in your budget. Budgets don't work when you overcomplicate them. You don't need high-tech devices or tools, and they don't need to be anything fancy. A simple piece of paper, pencil, and a calculator is all that you need. Any one of us can find a reason not to do a budget, so remind yourself of all the reasons that you should do one. And a budget won't work for you if you're not committed to it. Don't expect it to help you if you're not planning to live on it. When willing to live on a budget, it can keep money fights from happening in your relationships. It can remove guilt, shame, and fear from your life. It can show you if and where you're overspending, and it can give you power and control over your money. So you're ready to start a budget. The first thing to do is to take a couple of months and look at your spending habits over that period of time. After reviewing your spending habits, add up your monthly incomes. This should include full-time and part-time work, allowances, gifts, and any other money coming into your possession. Now look back at your spending habits and review and estimate how much and in what areas of your life you're going to need to spend money on during this pay period. Now total up your spending categories. As an example, total up all of your entertainment costs, your anticipated costs for gas, your cell phone, and clothing. Now, take your total income, subtract your total expenses, and see if you get to zero. If you find that your expenses are greater than your income, cut back on planned purchases and adjust your expense categories until you have a zero balance. However, if you find that you are making more than you're planning to spend, then work on other financial priorities like paying down debt and building savings until you reach a zero balance. Once you've made your budget, try to live off of it. Monitor your spending throughout the month and make adjustments as needed. If you happen to overspend in one area of your budget, take money out of another area. One way to help you plan for a budget is by using the 50-30-20 budgeting rule. That means that 50% goes to your needs, 30% goes to your wants, and the remaining 20% goes to your financial priorities. And our final and maybe most important budgeting principle is paying yourself first. You're always encouraged when you can to put money into savings.